Hello, Market Mindset listeners. It's Big Money Mike here, coming at you with the freshest scoop from Wall Street on this fine Saturday, May 24th, 2025. We've traversed the twists and turns of today's market news and earnings reports, and I'm here to break it all down. No fluff, just the real deal, with a sprinkle of Big Money Mike's unique flavor. Let's kick things off with a major win in the biotech space. Merus N.V. reported interim Phase 2 trial data for their bispecific antibody, petosemtamab, combined with pembrolizumab, in treating PD-L1 positive recurrent or metastatic head and neck squamous cell carcinoma. The results, a robust 63% overall response rate among 43 evaluable patients, including 6 complete responses. Even more impressive, a 79% overall survival rate at 12 months and a median progression-free survival of 9 months. These figures stand out because they suggest a significant improvement over pembrolizumab alone, the current standard of care. Importantly, the combination was generally well tolerated, with no serious overlapping toxicities, something that always weighs heavily in therapy adoption. If approved, this could redefine treatment for a cancer notoriously difficult to manage, potentially translating into meaningful life extensions for patients. This news is a big deal for Merus shareholders and oncology investors, as it opens the door for a new standard of care in this field, with potential blockbuster implications. 1, 3, 4. Shifting gears to the energy sector, uranium stocks and nuclear power companies had a banner day following President Trump's executive orders aimed at revitalizing American nuclear energy. The orders intend to cut red tape, fast-track reactor licenses, and quadruple nuclear power production over the next 25 years. This move is strategic, aligning with a massive surge in U.S. power demand driven by AI data centers and other technologies hungry for clean, consistent energy. Uranium Energy Corp, UEC, NuScale Power Corp, SMR, and several other nuclear players surged strongly. UEC shares jumped over 22%, NuScale Power nearly 20%, and ETFs centered on nuclear energy also rallied. This clear political backing is about reducing reliance on foreign-enriched uranium, bolstering domestic supply chains, and supporting a key low-carbon energy source. For investors, nuclear energy deserves a hard look as a growth sector fueled by tech demand and government support, a rare trifecta in today's market. In the steel sector, a riveting saga unfolded as President Trump endorsed a planned partnership between United States Steel, X, and Japan's Nippon Steel, signaling probable approval of Nippon's $14 billion-plus acquisition bid that had been blocked by the prior administration. This partnership pledges to keep U.S. Steel's headquarters in Pittsburgh, create at least 70,000 jobs, and inject $14 billion into the U.S. economy. The market reacted with gusto, sending U.S. Steel shares soaring over 21%. Though the details remain murky, whether it's a straightforward acquisition or a joint partnership with continued American control, the political endorsement is a green light after months of uncertainty. This deal could reshape the steel industry's trajectory, bringing new investment, jobs, and technology to a sector critical for American manufacturing. Notably, the union's concerns remain, but the stock is rallying on prospects of a deal finally going through. Turning to retail, the off-price giants Deckers Outdoor, DEC, the maker of Hoka and UGG, and Ross Stores, Rost, both took hits. Deckers shares plummeted nearly 20% following a cautious outlook amid tariff uncertainties and slowing U.S. direct-to-consumer sales for Hoka. Despite a strong fiscal 2025, with 16% revenue growth and margin expansion, the uncertainty of global trade policies and softer consumer spending have made guidance difficult. The company expects up to $150 million in cost increases from tariffs in fiscal 2026 and sees potential demand erosion due to price increases. On the flip side, Deckers is aggressively expanding its share buyback authorization to $2.5 billion, signaling confidence in its long-term strategy. Analysts have downgraded the stock over near-term challenges, but acknowledge the brand strength and international growth potential. Ross Stores also withdrew full-year guidance given tariff and macroeconomic uncertainty, even as Q1 sales and earnings beat estimates with a modest 3% sales increase. Tariffs and inflation cloud profitability outlooks, with over half their merchandise originating from China. Both companies embody the current retail market's duality, resilient brands grappling with geopolitical headwinds and shifting consumer dynamics. In enterprise software, Workday, N.V, reported strong first-quarter fiscal 2026 results, exceeding expectations on revenue, subscription growth, and operating margin, driven by AI innovation and solid customer expansion across industries and geographies. However, the market sold off the stock over a steady full-year subscription revenue outlook that fell short of boosted expectations, highlighting investor appetite for upside in this high-growth AI play. Workday remains a key AI beneficiary with 100% year-over-year growth in AI-related sales, extensive partner ecosystem traction, and a promising emerging market strategy with Workday Go. Their new AI agents and integrated AI offerings distinguish them in the competitive human capital and financial management SaaS space. The stock dip seems more a reflection of elevated expectations than fundamental weakness, and Workday's long-term positioning in AI-powered enterprise solutions remains compelling. Lastly, Booz Allen Hamilton, BAH, a prominent government contractor and AI technology integrator in defense and civil sectors, reported solid fiscal 2025 results, but posted a cautious outlook for fiscal 2026 amid federal spending cuts under the Trump administration. The company expects revenue growth to slow with a low double-digit decline in its civil business due to contract reductions and restructuring, including planned layoffs of about 7% of staff, mainly in civil divisions. Defense and intelligence segments remain strong growth drivers, especially given Booz Allen's AI capabilities embedded in critical national security missions. While short-term challenges pressure margins and staffing, Booz Allen is accelerating investments in AI, cloud, and cybersecurity solutions to align with evolving government priorities. Investors should weigh near-term execution risks against Booz Allen's strong positioning in an increasingly technology-driven government ecosystem. So, where's the opportunity today? My stock pick for this episode is United States Steel X. With President Trump's public endorsement of the Nippon Steel partnership, a resolution to a long-standing uncertainty appears at hand. The anticipated $14 billion infusion, promise to retain American headquarters, and potential for innovation and job creation position this steel giant for a rebound. The stock's recent surge has momentum, but the partnership details should clarify soon, possibly lifting further shares. Steel is a backbone industry, and this deal's execution might mark a turning point in U.S. manufacturing's industrial renaissance, a play to watch closely. Looking ahead for Monday, May 26, 2025, the S&P 500 is expected to tread cautiously amid ongoing tariff uncertainties and geopolitical tensions, with a slight downside bias possibly around -0.2% to -0.5%. The Dow Jones Industrial Average may mirror this caution, slightly down by about -0.3%, pressured by industrial and tech sectors. The Nasdaq could experience more volatility, with a -0.5% to 9.7% dip on tech and software stocks, repricing amid mixed earnings signals. Nuclear and energy sectors might hold steady or gain as the market weighs government support, but overall investor sentiment may stay defensive before the Memorial Day weekend. That's the market mindset for today. Keep your eyes sharp, your strategies nimble, and I'll be back soon with more insights. Until then, invest smart and stay curious. This is Big Money Mike, signing off from the Market Mindset Podcast.